Good morning, everybody. Good morning, good morning, good morning. Let's see, we're all started up here. Yep, 4 seconds in. Welcome, everybody, to the MMT Live Investment Show. Podcast every week on Thursday morning. So we're glad you're here to join us today. We talk about everything to do with independent finance, personal finance, and taking control of your financial future. What it means to look at some of these concepts that the overall market deems very complicated, or things that are anything that's hard to learn about. We want to bring as much light to it as possible. We have a really experienced panel with us today. Joe's been working with the markets. How long have you been working with the markets, Joe?
Okay, I'm 77 since I was 20. 50 something years.
Okay, so his entire life.
Yeah, exactly. Yeah.
Yeah.
Didn't I thought Joe invented the market?
I did. Yeah. Yep. Yeah. Well, his buddy came up with the Dow, but S&P was all him. Yeah.
There you go.
Randy, how's it going today?
Good. How you doing?
Good. Randy's a very experienced coach as well. He leads our Trading for Momentum covered calls trading, all the management techniques to tie in your whole portfolio to work together. He has stocks which underlie options techniques that he does, and he implements all those to make consistent returns over time. He does a really, really good job with it too. Tim, how's it going today? Tim?
Very well. I'm sorry. Didn't hear that last part. I was listening to your praise of Randy and was nodding vigorously.
He was probably looking for a new trade too.
Well, I am. I'm looking.
He's got his eyes going.
Yep.
Looking at this.
I can see the chart coming up.
All on Apple coming up. But anyway, doing well today. Had a relatively slow morning. Yesterday afternoon was incredible. Off the Fed announcement, we had within 10, 15 seconds of them doing, when they got up to talk about it, the market shot up about $1, and we got some great trades in on that. And then it calmed down for about 15, 20 minutes, and then it had a second leg up of another buck or so, and caught another great trade on that. So just goes to show you folks, Joe says it every morning. If we're going to come back, put your name in so we can send you a text letting you know that we're going to be back. And we only had a few people on there, which was too bad because the opportunity was incredible at that time. So we pulled some great stuff. But anyway, Apple just it must be tired from yesterday. It's just very slow this morning.
Yeah, I tell you, show you how good it was. I had I keep these things and report them daily, what we do in a day. And because we had that second session, it came in too late after I'd already closed down. So I reported them today, but we did 192.6617% yesterday. 192. Normally, we fantastic if we have 100 for the whole week. Right now, counting through today, and if they don't do anything this afternoon, we're up 271.5851% through today.
Wow. And our weekly average is about 99%, right?
Yeah, or even a little bit. Sometimes 50, sometimes 125. It's
yeah.
Micah, we're going after your record, buddy.
Yeah, what was that? That was only at like 240. You might have hit
it. Maybe.
That 271 may be over. Yeah.
I think you did. Yeah, I think we hit a 240 one time with Tony.
Oh, Micah, they had yesterday. They had a 35% trade on Apple. They had a 44% trade on SPY, 15 on Apple. I mean, huge, just huge.
Wow.
And all the clients on the session, microphone session, were reporting his huge returns. So
that's fantastic.
Yeah,
that's awesome. Yeah, to clarify, I mean, if you're with us or not, every Fed rate announcement, completely dependent on your strategy, but if you do anything similar to what we do, Fed rates are worth your time. Just go look. Just go look. It used to be Trump tweets. Now it's Fed rates. It's always been Fed rates too.
The neat thing, Micah, is we on that micro moment, as a lot what Randy does too. We never, get into a situation hoping it goes up in value or hoping it goes down. We don't care. We just want to go one way or the other. And so a Fed announcement is perfect because it no matter which way it goes, it's going to be big, and that's what happened yesterday. So.
Yeah, the amount of freedom you instantly unlock by opening yourself both directions is just I started with you guys when I was young, so I didn't like calibrate that in my mind.
Yeah, but you're an old man, you're forgetting a lot of what you learned before.
Yeah, the ability to just not say, oh, this can only go up for me to survive. That's the only reasonable situation because the market's so unpredictable.
Yeah.
That's fantastic.
Yeah.
Well, killer week. To clarify, those returns that are listed are between two of our trading coaches on there. So that's not Tim just by his lonesome has doubled his account this week. I want to clarify how we define our ROI there. But insane week. Really nice. Awesome.
Crazy.
This week this is a perfect week to talk about it because we are talking about getting to know the Greeks. So the options Greeks are a set of characters that represent different aspects of movement within the options. We're going to go over some of those today, but if anybody missed it, you can go find the cow report on our website. You can sign up for that. It comes out free every week, and it always has the editorial that we're going to do the topic on. So if there's any specific definitions, the cow report's a great place to get that. You can find that on the homepage of our website and sign up for that for free. So the options Greeks are really important because there's a bit of a disconnect, I think, when you walk in the door on options movement, because you walk in, first of all, there's calls and puts. That's confusing as heck. And then it doesn't move as much as the stock does. It just kind of moves this arbitrary seemingly amount. And sometimes it's a lot and sometimes it's less. So how does that actually work? Well, we can look to the Greeks for that. I want to start off. Randy, I think you're the good person to talk about this. For a beginner trader out there, can you explain very clearly expiration? Because I think there's a bit of misconception that options, they expire and they go away. Could you explain how that process works and why people shouldn't just buy and hold an option?
Yeah, well, options do have expiration. So when you select an option, there's a thing called the option chain. That's where all the data about the options is displayed on your broker platform. And so you select what expiration you want to have for the option. So you can have an option that expires in a month. You can have an option that expires in a year. You can have an option that expires in a week. And it might only be a day or two away. So you select it. At the end of that expiration, when they said the option expires, like tomorrow is the March monthly expiration. So all the options that were bought for the monthly of March, they all expire tomorrow. That means after tomorrow, they're done. So they either have a value tomorrow or they have no value. Part of the value of the option is called time value. And the time value starts at some level at the beginning of the life of the option. And on expiration day, there's no time value left. So that's what, from a covered call perspective, that's what we use to generate our income is that decay of the time value. It's called decaying when the value decreases on a daily basis just based on time going by. Now there's a theta that goes along, or there's a Greek that goes along with that. It's called theta. That's the rate of decay of the time value. But we don't really pay attention to that from a covered call perspective. We just know that the time value keeps going down every day. And the closer that it gets to expiration, the faster that time value decays. The major Greek that we look at from like a cover call perspective, and even from what Tim does, is the delta. The delta is the Greek that says the rate of change of the price of the option with respect to the change of the price of the equity, whether it's a stock or an ETF. So if the equity changes by $1 and the delta is 0.75, that means the option price, the premium of the option, is going to change by 75 cents out of that dollar. So the option always changes at a slower rate than the equity does. But that doesn't matter from the trading perspective that we do, because you buy the option. If the stock goes up, the option increases. And so if you're doing a very short-term trade, you can get in and out of that position quickly. That's what Tim and Mike and Deshaun do. And otherwise, from like a covered call perspective, and a covered call is we buy a stock and sell an option against it. That option gives the right to somebody to buy the stock back from you at a set price until that set expiration date. So when we sell that option, we get a premium. We get paid for selling that option. And that includes time value. And that time value decays down to zero. So we're basically making our profit on that time value that decays. And so the more premium that there is, and you talked about yesterday with the Fed, that huge volatility. When the stock changes up and down dramatically, that's called volatility. With that huge volatility also comes high option premiums. So the more volatility there is, the more that we're going to get paid for our option. So those are kind of the two major Greeks that like apply to cover calls. The delta is the biggest one, and that's how much the option price is going to change when the stock price changes $1. Absolutely. And then there's theta. That's the amount of time decay that there is on a day-to-day basis.
Time value is so huge, because the way I see it is, it's like I might misquote. Is it the Geico name your price option, or is that a State Farm thing?
Is that Progressive or is it Geico?
It's one of them.
Yeah, it's one of those that you get to name your price, right?
Right.
It really is the name your price option, because I mean, you can go into, if anybody hasn't looked at an option chain before, you can go into an option and look at options on one stock, and far enough out, they're a few $100 to close enough. They go all the way. If they're outside of the money, they expire at zero, and everything in between. So you can tailor it once you understand these Greeks, is what I'm trying to say. You can start to tailor your trading experience to the time frame you need to be. If it's a little bit too rowdy and too volatile, and you're like, man, it's just moving too fast, you can just adjust your placement. Get something with a little lower delta. Get something a little higher priced, right? Because the big factor I want to explain before moving onward. Actually, Tim, you'd be willing to, is the difference in trading an 80-cent option versus a $1.30 option.
Sure.
And why that percentage starts to hit so much quicker.
Yep. Yeah. That's a great question. We have a kind of with MMT, we have a sweet spot, at around $1.20 really now. But the higher the price of the option, generally the higher the delta. So we see increases in volatility, in price jumps, in premiums. The jumps are higher, right? They tend to go up higher, but they also tend to lose larger amounts. Whereas an 80 cent, we may be looking at, over a 5-second period, we may see a 1 to 2 cent rise. Where at the same period of time at the higher price, we're going to see a 5 to 10 cent rise. So we pay more for that premium, we pick up more delta, and we see greater increments of price movement at that. So that's the main difference. It's a matter of price volatility that we're considering between the two price point, or between the two strike points.
Yeah, absolutely. And they can do that on the same stock just by moving a little bit. And I mean, they and everyone here can do that. Yeah, if there's any questions throughout this entire episode as well, feel free to drop a quick question or comment on YouTube or Facebook, and we'll be able to see that and answer it live for you.
Mm-hmm.
Let's try to make time to get to as many of those as possible. So feel free to drop them in.
Absolutely.
Yes, the main reason we covered Greeks this week is because of. Thank you for that explanation, Tim. Is to start to define the terminology. I think there's a large portion of terminology, especially when you get to start talking about Greeks, that kind of seems very confusing. I guess, Joe, early on, what was your vision for like simplifying this whole process? How do we go about making it like that's what I really could keep coming back to as all of our traders is we simplify the process.
Mm-hmm.
I'm not real good on simplifying it with the Greeks because I really
didn't
use the Greek. I use the delta. To me, the delta is the most important one because that indicates how quick something's going to go out. And I really, in all honesty, I just don't deal with my favorite Greek is Jennifer Aniston. Actually, she's Greek descent. Yes, she's the one I like the best, and would use if I could have.
She's a good one.
Yeah,
that's right. Yeah, but no, totally honest. I mean, I just these guys are so much better than me and you are too on Delta. I mean not Delta, but on the Greeks. So I just have to be honest with you. So any information I give would not be good.
Yeah.
Well, Micah, that's one thing. The market really tries to keep people confused when they talk about all the Greeks and this and that.
Yeah.
When it really is, it comes down to being very simple. It's the delta that really makes any difference from your actual day-to-day trading.
Yeah.
The higher the delta, the faster the option premium is going to move when the equity moves. The lower the delta, the less change there's going to be in the option premium. And then just from a day-to-day perspective, the premium's going to go down slightly. If nothing changes with the stock price, the premium's going to go down slightly. The further away from expiration, so if you buy an option that's a year from now, it changes very little from day to day from time value. The change is all based on the equity going up and down. If it's going to expire this week, then that day-to-day change is much more dramatic. If the stock price stays the same, the option is going to decrease every single day a lot more than it would if it was a year from now. That's what you need to know about time decay. The big thing is the delta. The deeper in the money the option is, that means the lower the strike price is on the option. And the strike price, what we're talking about, is that's the price that the stock will exchange hands if that option is exercised. If the owner of the option says, yeah, I want to actually do this, then the stock will change hands at that strike price. The person that sells the option or the buys the option, you decide what is the strike price that you want to deal with. There's a whole list of all the different prices on the option chain. Each one has a different premium for the option itself, but you decide what your construction is going to be. Do you want to buy with Apple? What's Apple trading at? 124 or something now?
122. Yeah.
It's around 122. So if you were going to buy an option on Apple, you decide, do I want to exchange at the 122 strike, the 124 strike, the 120 strike? You select what you want that to be if you get if you're going to exercise it, if you're going to actually do the transaction. Otherwise, you just buy and sell the options. You don't have to ever get the exercise of the option until expiration. Most people just buy and sell the options. In fact, almost all option traders they never actually execute that final transaction that says I'm going to buy the stock or I'm going to sell the stock. They just buy and sell the options as they go up and down in value with the equity change, the price in the equity change. So um, it really is a very much more simplistic process than a lot of those gurus on TV want to kind of lead you to believe, because they really want to kind of keep you confused, so you have to listen to them as opposed to just learning how to do it yourself. Um, when I first started in 2006, I never heard of what an option is. I knew the name of option based off of real estate. I knew that you could buy an option on a piece of real estate, put down a couple $1,000s, and kind of control that real estate for a set period, like 3 months, so that you can kind of decide, do you really want to do it? But the owner of the real estate then has to kind of hold it in limbo until you make your decision in that 3 months, because you paid them for that waiting period. I knew that kind of a thing, but I didn't know that it applied to stocks. So when I came to Joe's seminar in 2006, man, it was just like, wow, all this information is out there. It's not that difficult. And I just never knew it existed. And so then I learned how to do covered calls and generate now weekly income with covered calls. So it's not that difficult. Anybody can learn how to use options. You just don't pay attention to all that stuff you hear on TV about all the what alpha, beta thing. It's you buy options, you sell them. The delta is the biggest thing to look at when you're trying to make your decision.
Yeah, Micah, and Randy helps me with this on that. Every few months we do that covered calls and leaps of wealth option 2-day seminar, and we cover options in that, and we mention the delta and these other items, and but and we teach in that seminar. Nobody ever, when they like, if I bought something from Randy, I'm not going to exercise it. I'm just going to sell it and make my money just on doing another option, getting in and out. I'm not going to go through the deal of executing and taking the stock, because I got to pay commissions and I've got to have the money to pay him for the stock and all that kind of stuff. So it's I mean, the delta is, I think, the best one of the bulk of them. Concerned with
But just to kind of round out, we often refer to these Greeks as the four big, and the last two in the theory is theta and vega, which is how the option is affected. It's changes in volatility and the passage of time on those two. I just want to put those in. With MMT, with what we do, delta, like the other guys have said, delta is the only thing we really consider. And we only consider that when we're looking at the strike price. What strike are we going to enter a trade? And that's really our only concern, because in our style of trading, it's just too fast. We don't really have time to look at all the Greeks and what are they saying to us. And frankly, we don't care, right? We're looking at tick movement and momentum in our style of trading, which our ICE charts give us all that information in a handy little snapshot. So it's,
I mean, the basis of your time frame anyways, how much time decay are you going to lose in 4 minutes?
right, exactly.
Yeah, 40 seconds.
Yeah. Hey, Tim, I've got to figure out the only one I'm going to deal with is Jennifer Anderson. The only Greek I'm going to deal with. But I picked out the one for you, Tina Fey.
Tina Fey?
Tina Fey can be your girl. Yeah.
Okay. All right. That'll work.
Yeah.
she's smart and beautiful.
Yeah.
And, sorry, what were you saying? I just meant the quick note, but I distracted you.
Exactly. Time decay, why we're in a trade, time decay is just not an issue for us. Where it does become an issue as we move through the week and we're getting to expiration. Apple expires every Friday. That does become a concern, because time decay, as we know, is not a straight line, right? it's a parabolic curve that steepens as we get later in the week. So on Fridays, we will trade same day expiration for about 45 minutes or an hour. Then we're seeing those zeros march up the option chain, and it's time to go to next week. That's really our only consideration of time decay. We know we don't have any time left. So it's time to move into next week.
Basically parabolic means the rate of decay he's talking about. You're kind of.
Yeah.
That's
very, very steep on Fridays. And it's just funny watching the intrinsic value zeros really basically march up the option chain on Friday mornings.
Yeah, people just say it gets close, like farther and farther away from realism.
They used to compare that parabolic. What do you call it? The little
parabolic line.
They used to find it. When we used to do the live seminars, and say, it's the stock here, and this, or it's Joe's memory.
Yeah, I know the feeling. Believe me.
The parabolic face plan.
Yeah.
Absolutely.
No, because we do teach that, though, particularly in the micro moment, and Randy really didn't have to teach it. But we just tell them in the micro moment, hey, this is Friday. This is like get out of this thing by noon on Friday, because it can go zip. It is going to go zip. It's going to go.
It's going to go zip.
Yeah.
Guaranteed.
Yeah.
No.
And Joe, also you were talking about the seminars. I think Dirk taught a one-day workshop on options basics earlier this year, and I think there's probably another one coming up. So where he just goes through from beginning of ground zero up through all the basics of options, all the terminologies, how to use them, and answers everyone's questions about what. So it really takes the mystique away from options, so people can really start from ground zero and learn everything they need to know about options.
Yeah, and they're not complicated. As Randy was saying, trading options is very, very simple, especially trading the way we trade in MMT with our quick turnaround. It's very simple. There's so much information that does not pertain to our decision making when we're trading on such short time frames. It's really refreshing. I mean, it's got to be one of the easiest techniques on the planet.
I really wish when I had started trading first off options, I tried to begin to understand options, and I wish somebody told me just like, you know what, in reality about 80% of it is theoretical. You're going to an expiration which you're never going to get to. You're asking for a contract or a stock you're never going to own. You're working off of a delta that's theoretical, because if it moves faster, it's actually going to move more than that. If it moves slower, it's actually going to move less than that.
Right.
Every Greek is an estimation. Everything is a theoretical almost.
Yeah, the interesting thing is, though, Micah, is that there's somebody going to exercise those things, because it comes expiration day. They're all out there. Yeah, but they're the big guys. They're institutions that then really want to acquire that stock for whatever price they've got on their option, because they like not Hathaway, but what's his name, wealthy guy?
Elon Musk?
No, the other one.
Buffett.
Warren Buffett.
Buffett. Yeah. He got started with covered calls, and it's his primary way of getting control of those companies at the price he wants. He'll be going in there. Probably Tim and our other guys have sold things to him. When he puts his mind, he wants to buy this company for whatever reasons, and he can go in there and start picking up good prices on those daily activities, those options. He'll buy tons of them, and he ultimately will use them to execute.
So why
he decides to buy the company.
Yeah, I have a post coming out from him next week. I have a post with a quote from him, and it's a different one, but the one I was originally going to use is he said once, he's like the and this isn't word for word, but the people that win the game are the players that focus on the playing field. not the scoreboard.
Mm.
It's
Yeah.
like people that are absorbed in the scoreboard, every little turn of it and change of it, they can't
Yeah.
look at what's going on. He's like, I don't care. He says, I want to see how the field's functioning and work within that.
And that's what day traders are. That's a good description of day trader. And that's why they end up losing so often.
They're superstars.
Yeah.
And that's fine.
Yeah.
But superstars break ankles, some of them, unfortunately. Craig says, things I've learned. Be careful of same-day expirations. Trade higher deltas because you are getting bigger moves. Believe the charts. Get out when it turns red.
Yep.
There it is, Tim. There's your whole teaching, all in a couple sentences.
Yeah, you guys don't need me. Literally, that's everything.
That's it.
Those are micro moment terms.
Yes.
On the chart, that our advanced charting, we've got that little red button.
That all pertains to those really fast trades that Tim does. We're in and out in the blink of an eye, almost less than a minute from buying to selling.
A lot of times they're
whereas
15
mine are a little bit longer. Mine are a couple days to a week.
Yeah.
So it doesn't happen quite so fast.
Well, it takes you sometimes a half a day just to enter a trade. Beep, 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 beep.
I just can't imagine how you did trades on a touch tone phone.
Oh yeah,
It was not easy, Tim. It was not easy.
It was terrible. Were you back then when they were them on the phone?
That was so frustrating
Yeah.
way back then. Not really even knowing what the outcome was until the next day when you looked at your broker statement.
And you had to get a confirmation. You'd push the buttons, and then you wait for it to confirm. Hell, sometimes the confirmation just pushes the buttons. I'm getting ready to buy something. Hell, it may take them 15 minutes to get back. They've got to order IBM. Yeah.
Yep.
Oh,
Tim, you could not do back then what you're doing today. It was not possible at all. I mean, you're generating income in multiple times in the same day. You could have never done that back. Like I started in 2006. It was even worse before then. But you couldn't get in and out of something in a minute. It took minutes just to get in, and then you didn't even know for sure what you had. So it's come light years advancements in these last 15 years.
Yeah.
And everything, Joe always says that every single thing that the market does improves our ability to generate income. Every single step along the way. There's not been one thing that makes it less likely to get a profit.
You go back to those old days, Randy, and the trading platforms were prehistoric compared to today. And so everything CBOE's never come down and said anything and never did anything made us change any of our techniques. It's always just made them smoother and better, as have the guys that come up with the trading platforms,
Yeah, my kudos to CBOE, who has done nothing but continue to enrich the online options environment, and is coming up with new ways to trade.
Well, their latest thing about used to be just once a month expiration. Randy and I went years and years just telling people what they can make in the course of a month, 5% in 1 month, and make 5% a week. Because Friday expirations and Wednesday expirations or whatever else they had.
Yeah. So, And now they're introducing half-size contracts.
Yeah.
E-minis as well.
Yeah, the E-minis. Yep.
Oh, one of the major New York banks yesterday came out with the first fund on Bitcoin. It's a Bitcoin fund.
Interesting.
Yeah.
They just did that first psychedelic mushroom fund as well.
Yeah.
Yeah. Psilocybin. I'm sorry, Joe. I know that would throw you ahead, dude.
Yeah, there you go.
I keep waiting for him
What
to come up.
What you need to do, Mike, is go out there and bust into another building up there in
Seattle.
Oh yeah,
in Seattle. Yeah. I still keep waiting for him to come out with daily expiration on the options where you have 5 expirations during the week instead of
well, there's some with 3.
Well, Spy's almost there.
Yeah.
Spy has 3, so that's only missing 2 of the days.
Out of 5.
But I've heard rumblings of talk about them maybe considering it. But
wow,
that would be something if you could get the time decay in 1 day. You could really generate some income.
Yeah,
man. That would be interesting. That would be fun.
I do have one more aspect of this I want to talk about. But first, does anyone know why SPY went to 3
I'm sorry,
before?
you broke up.
Is there a reason that SPY?
We didn't
Oh,
hear what
sorry.
you said. You said, yeah, you said, does anybody
Oh,
know why? And then there was a break
oh
in
no.
your
Perfect timing. Does anybody know why SPY ended up with the 3 expirations?
I don't
And
know.
why they used it there first as opposed to, IWM or
Well, yeah, back from the history, it started with the SPX index. So the SPX was which is the S&P 500 index. I think it's the largest traded index. So it has the most um, the most number of contracts traded every single day. And so somewhere along the way, someone kept requesting, because you can call the CBOE and you can say, I would like to see options on this or that, and
Mhm.
they'll consider it if they think there's a market for it. So someone came up and said, well, hey, we have the 1 month expiration, but we'd really like to be able to trade on a weekly basis. So they started in 2010, I think it was, with just the SPX, just the S&P 500 index, and they started doing weekly options with it. They did that for almost a year to kind of get a feel for. I guess would call it their beta test, so to speak, to see if there's really a market out there. How much activity would there be on that? And then I think they saw pretty good activity, and so they increased it and spread it to the NASDAQ 100 index and the Russell 2000 index, so that there was 3 indexes that had the weekly options. Then they moved to the SPY is the ETF for
Mhm.
the S&P 500 index. And what ETFs are, exchange traded funds, they act just like stocks, but they try to mimic what's in the index that it mirrors. So the SPY really has like the 500 stocks that the S&P 500 index has. So then they started with weekly options on those ETFs. That eventually, after a few years, kind of spilled over into individual companies. So now there's hundreds of companies that have weekly options. So then I guess the next step was for them to see, well, what if we had more expirations than just once a week? So that's where SPX came in, and they started with it to see if we had a Monday and a Wednesday and a Friday expiration, are people going to trade that? Are they going to, because they make their money with people trading the indexes. So that was successful. So they have actually NDX now also has 3 times a week expirations, but the only equity is SPY that has those 3 times a week expirations, Monday, Wednesday, and Friday. I'm still looking for them to get the QQQ to come under that umbrella as well, because that would be fantastic if we could
That would
do
be quite the ad.
QQQ 3 times a week as well.
Yeah.
But they just kind of move slowly. They don't do anything really rapidly, and so there's been little rumblings, kind of way back there out into the Netherlands, that they could potentially be looking at a possible daily expiration.
Wow. So everybody listening to us, get on, call the CBOE and put in a request for
So we'd like to have options that expire every day.
Yeah,
yeah.
Randy, if they've got 3 on SPY, why? What difference does it make if you have 2 more days? I mean, it's almost the same thing. It's almost
it is pretty close.
Yeah.
Like it allows me to do cover calls 3 times a week on the SPY and generate the income from time decay 3 times a week.
Yeah.
Because it's the time decay on a covered call, because we do in the money covered calls, which means when we buy the stock, we sell an option to give somebody else the right to buy it for less than we paid for it, but they give us a big amount of money up front.
Yeah.
That more than offsets that difference and gives us a profit from the time value decay.
Yeah.
That allows us to be more conservative, because the stock can go up, down, or sideways. We still get called out. We still get all of our money back, and we still lock in that profit. When we can do that 3 times a week instead of once a week, we can compound our returns by using the same money 3 times a week to generate income. Tim
I-
uses the same money 3 or 4 times a day to generate income with his micro moment trading.
Yeah.
So the more times you can use the same money to generate a profit, the bigger your profits are going to be.
Yeah, I think that maybe the old third Friday closing date was the only one. I think what's driven this is the computer abilities to do it other than once a month. In other words, it's got to be complicated. There's got to be lots of computer stuff going on to have expirations like that. And I think probably a lot of that has driven, and they probably did CBOA. They said, well, now we can do 5 days a week. Our computer guys say,
I'm not convinced though. Like if most options are still weekly, and SPY is the only one, I think the volume dilution could really screw that up. Like if every strike was spread out over 5 of its similar strikes that week,
well,
like you might just lose all volume.
Yeah, well, originally when it was the third Friday, there was a big on the Saturday after the third Friday. That's when all the computers went to work in New York City.
Yeah.
People exercising, not exercising, all that. And I can see that'd be huge. Now, if they're doing it 3 days a week, it's still huge. In other words, you're having a third Friday, 3 days a week, and it has to be confusing. But I suspect that they'll come around to the fact that they can't have the capacity to do it with computers.
Yeah, I think part of like the Monday, Wednesday, Friday, it could also kind of revolve around settlement time. Yeah, options are settled in 1 day now. They used to be 2 days. It used to be, and that was the whole thing with Robinhood and all that stuff was the settlement. But they're pushing to have like same day settlement because of the computerization. That it's not like the old days with your check that the bank had to fly it from one bank to the Federal Reserve and then back to the other bank, so it took forever to clear. Now with the computers, there's no reason why it can't clear in a minute. And would they ever do that? They're having all those discussions in Congress and stuff. But I think if they ever get down to where it's same day clearance, that maybe they will have a lot more equities that go to like a Monday, Wednesday, Friday, or multiple times in the week.
I feel like that would make a large part of margin irrelevant, though, and I feel like they make a lot of money off the margin.
Well, people still like to trade more than they have. So, but
that's true.
We never trade on margin. That's what I just want to say. We don't trade on margin. No. Margin is like dangerous. We always say don't trade on margin, but because we're using options, that leverages our capital to allow us to have similar types of returns as if you were using margin. Because the reason why people use margin is they want to be able to make $100 out of a dollar, and they can't do it. But if they can take the dollar and buy $100 worth of stuff, that's where they get into trouble. So we don't trade on margins, but because we're able to trade with options, that leverages our capital so that we can generate just phenomenal returns.
Yeah, let me get this Pat's deal, because it's my favorite subject, the red light.
Yeah.
Pat says, I'm looking at the MMT charts and enter a call when the tick's going up. As soon as something turns red, get out. And that's true. The question is, what are you looking at that turns red? On that chart, on the screen that Tim puts up, you got a little red light, a little green light. And once you're in that deal, that light's going to be red or green. If it's red, you need to get out. If it's green, you need to get out too, because we're only going for 2 or 3 cents. Sometimes, Tim or I guess I'm going to wait. And I always gripe to them about that. Don't wait, just get out. And they said, well, it looks like it's really going up. I'm going to do better. Well, then a lot of times it just turns and goes negative. So.
Yeah, and Pat, just visually give you a clue. If you look at your E4 on the very bottom, you see that center line oscillator. When that green bar goes up, the green just simply means that price moved up higher than it last reported. And the red means that the price reported lower than the last bar that reported. That's a great indicator of what Joe's talking about, right? You have a green line where that tick is moving up. When that hits red, it's going down. If you have any other charts up, if you're on TOS and have a chart up there, the same thing works. But you can also say if that tick moves in the opposite direction, that first bend in that tick, get out. You know,
because it all functions off of momentum. And if momentum ceases, you're dead in the water.
exactly.
And with options, because of all that we've talked about today, if you are dead in the water, you don't stay the same, you actually go down. That's one thing I would like to clarify about all this. Options in place do not stay in place. That sliding scale is always working itself down. That's another reason we don't end up, well, it could go up for a while. I'll just stay in it for like an hour. That's way past. We have to keep that all proportional to the type of technique we're doing. If we're doing a Randy technique, we're already built for that. We're already ready for that. Our delta's not going to screw us over. We're fine. But if we're meant to be in it for less than a minute and we start to push that, there's danger at every turn because of course there is. You're not set up for that.
Yeah.
Yeah, Joe?
Yeah. I was going to say, you would think if you had like a daily option, or even when they have it three days a week, you would think that would be great on that expiration day. That would be great if you're doing your puts because you know it's going to go down. You know it's going to disappear to zero. What's keeping it from? Why is that not sound thinking? What am I thinking wrong?
Well, the thing that comes to mind to me is remember there. If we're trying to close that position, there has to be a buyer for that position. And as we're getting closer to expiration, there becomes less and less buyers.
Yeah, because they're not going to have any opportunity to do anything with it. That's right. That's exactly right. Yeah.
Right. So, go ahead.
Well, I was going to say that's one of the major differences between like what you teach, Tim, and what I teach with covered calls. With the micro moment trading, what Tim's doing is you do not want to go to expiration on your option. No. And like he just said, if you rely on near the end of life, you have to have somebody that is going to do the opposite of what you want to do. With covered calls, the way that we construct it and how I teach it is totally different. We want to go to expiration. We want to be called out. We want to have all the time decay, and we don't have to have somebody that's going to buy our options because it's a whole different setup and construction. So not the normal way that you're going to hear on TV with the use of options. We kind of do the opposite of what the typical options trader in the market does. We do deep in the money. We sell that time value. We let it go to expiration, let it get called out. We don't have to have somebody that's to sell our option to at the end. The market takes care of it. But that's totally the opposite of if you're doing in and out in 30 seconds. There has to be a buy and a sell that takes place.
You enter on a sell. Yeah. As opposed to entering on a buy, regardless of if you're.
Yeah, exactly. Yeah. We're selling the option where Tim's buying it. Mm-hmm. And they're different options. we're not doing the same strikes on anything. Right. Far from we'll never be trading on the cover call the same option that Tim's doing on the micro moment trading. Those will never cross. So we're never the buyers of what he's selling.
By the way, today's the first.
No. It doesn't matter. And what Tim is doing doesn't impact what we do with the cover calls. So
by the way, Mike, today's the first day of baseball season for Randy.
That's right. I got my head
up.
The first game is this Sunday if the weather holds up. That been pretty bad weather this last couple of days so far here. So we may be rained out. I know my grandson's baseball game last night got rained out. So we'll have to see if the fields are going to be dry this weekend.
That's awesome.
But it starts a season. We play one game a week, and so we're looking forward to that. It goes from now till September.
Yeah, that's awesome.
Yeah.
And by the way, I'm the starting opening day pitcher. So
all
right,
it's already been announced. So
you made it.
That's good. He goes down and plays in Puerto Rico and does a lot of playing down in Florida too.
Yep.
Yeah.
Where are you going to be playing, Randy?
Not sure yet what field that we're on. We play on the high school fields around around in Atlanta. Last year we did a lot down in Peachtree City and then over in Duluth.
Nice.
Did you see Greg's quote there?
Yeah, that's a good one.
I guess he's quoting Mick Jagger. Time waits for no one, and it won't wait for me.
Yep.
Yep. That is absolutely true in options.
Yeah.
Options do not care about your feelings.
Time marches on.
I think, and I'll try not to launch into a whole nother topic because we are about to close up. But just a final note that we may have to come back to next week. I don't know, but one thing to keep in mind when trading options is the institutional presence is much different. What I mean by that is you have retailer, us, and then you have institution, all the people that that we talk about them, right? What they're doing and how that's going to play out. That's very important to consider because all the rules are different. If each person in line is buying, a few thousand contracts in an order, and then each person in this other line is, buying a little bit to add to their portfolio, they're opening some sort of overnight swing on their whole account is about 12 grand and they're going in with 3 grand. It's different market dynamics entirely. There is a lot more of that to be aware of in options than stocks, which I think is well, not necessarily more.
Well, I mean, institutional traders who are making bigger buys, or they're taking large tranches of money and splitting that up into manageable sizes, can move the market.
Yeah.
For us, and we can ride on their coattails on short-term buy-ups that they do, and we see this in Apple all the time. We can almost tell when we see it jump from 20 million to 21 million in 1 second. We know one of the big boys has just made a massive buy, enough to move the price. So we can see that, which is a lot of, we keep track of the underlying value, the price on the underlying asset, just for those kind of jumps.
Yeah.
But you're right, it is different, but we can take advantage of it if we're paying attention.
Yeah, as long as you're aware of it, you can move with it still, right? Because there's still just buys and sells going through. You just have to be aware of that because I think that's why time waits for no one. Time waits for no retailer. Right, but time is institutional because they get to control that price by and large for and they work with each other as we've seen with a lot of things recently. They're not necessarily opposed to that. So it's all that to say, I guess we have more to talk about next week. But awesome show today, guys. Thank you so much for hopping on here.
Absolutely.
April, let me get the date for us. April 10th. We have an intro to options workshop. Basically, we have 2 coaches. Is it both of them this time or just one of them?
I think it's going to be both of them.
They're doing together? Okay, so 2 coaches are going to...
Dirk and Ben. Yeah.
Dirk and Ben, yeah.
I think so,
They're going to run through everything there is to know about options basics as is relevant to a retail investor. They're going to answer live questions, and they just did a big sale on it. It's $65 right now until the end of March.
Cheap.
Wow.
Yeah,
that was great.
So we usually do bigger course stuff. We've never really offered something like this. We're trying it out. So if you guys want us to keep it, let us know. Sign up for it.
That'd be a good one to do the day before our 2-day cover call late, because that would get all the definition. We don't really go into definition defining. We go into defining how you work everything, but that way people would at least have some idea what we're talking about.
That's a really good idea. Yeah. Like a prerequisite.
Yeah.
Yeah, it could save you a lot of time and have you guys really be able to answer more questions directly about covered calls.
Yeah. It's always very difficult since Randy's been joining in with me on that thing because he doesn't ever shut up. Very difficult to get questions.
He has a lot of material to cover.
How long is the covered call slide deck now, Randy?
Oh, hundreds of slides. Oh, just another quick plug. I will be teaching this Saturday. I'll be teaching trading for momentum. So
Yes.
Or-
Charting for momentum.
charting for momentum, learning how to use our advanced chart to trade any type of process or technique that you want to use. Everything is really based on momentum. You want to be going in the right direction. And we use our advanced chart to be able to determine that. And this Saturday, I'll be concentrating on how to do that and teaching people how to read our advanced chart.
Wonderful.
Yes. Because none of that, I mean, for us, none of it works without that advanced chart. I mean, we talk about a lot of other things on here, but at the end of the day, we understand how that chart reads, and it is a proprietary tool. But sign up on our website, but it is quite simple to understand, and when you fully understand it, it's just reliable, and it's the core of all of these different techniques, all these different places in the market. Yeah. So, and that can be pretty well that workshop you're doing can be pretty well adapted to any of the techniques, even micro momentum.
Absolutely. Yep. The chart is just 21 technical indicators all rolled into one chart. And so you learn how to read it based on whatever type of trading that you want to do. You read the different indicators, and it helps you determine when to get in, when to get out.
Yeah. Absolutely.
Yeah. Essential. If you haven't taken this course, please do.
Yeah. It's fantastic. Awesome, guys. Well, thank you for being here. Joe?
Enjoyed it. Thank you very much.
Awesome. Thank you so much. Have a great day, guys. Leave
Hope
comments.
everyone has a great weekend.
Yep, absolutely.
Talk to you next week.